Hi, so this is another video in the course explaining price action. But before we dive right into price action, we should first know what market structure is. So I did some examples here that we'll go through shortly. So market structure 101. In the market moves in a trend at all times. All right, so it's either the market is trending upwards, that is forming a series of higher lows and higher highs, or the market is trending downwards, that means it's forming a series of lower highs and lower lows. Or the market is in a sideways trend, also known as a consolidation range or a price range. All right, so on the left-hand side here, we have a example of a downtrend or a bearish trend. In a downtrend, again, what do we have? We have lower low, lower highs, lower low, and lower highs. This is called a lower low because it is lower than this low, than the previous low. And this is called a lower high because this high that the market made here before pushing to the downside was lower than this high up here. All right, so very simple to understand. And in uptrends, we have a series of higher highs and higher lows. When the market is trending up, it will continuously make new highs and new higher lows until structure is broken and we have a transition or reversal in the market. And for the third type of trend, which is a sideways trend, this is an example of how a sideways trend can be formed in the market. So we have the trend pushing down initially. So assuming we have a bearish trend, price forms a lower low. Then following with regular market structure, we have a lower high being formed. But instead of price pushing below and forming a new low, it maintained this level of support here. So price failed to trade lower. All right. This is usually one of the signs of the beginning of a range, but this would confirm it. When price fails to trade lower, but it also fails to trade higher than the previous lower high, now you have confirmed you have a sideways market trend. The market is trending sideways. It is not going higher. It is not going lower. That is usually when there is equilibrium between buyers and sellers in the market, meaning there's low volatility in the market, so it trends sideways. But once you have a ranging market, you would usually expect price to break out in the upside direction or to the downside. In this example, price broke to the downside. So we had price consolidating in the range, as you can see. And then we finally broke below this low, which was the main low, to form a new low, which is the new lower low. And then it formed a lower high again, continuing with regular expected bearish structure, forming lower lows and lower highs and inform us that the market is bearish. All right, so now that we have the market structure 101 out of the way, we can get into a quick explanation of price action. So price action is a trading technique used to analyze the charts to make predictions about its future movement by relying on price itself. All right, so it's about really deeply studying how the market behaves over time, and it helps in identifying trends, patterns, and key levels. But I want to go back to where I said make predictions about its future movement by relying on price itself. So what that means is when trading raw price action, you don't use much moving averages and RSI volume indicators and oscillators. You don't really use lagging indicators to help you identify moves in the market. You use price action, you use market structure. You look at how the market is trending and identify the trend in the market first. Is the market moving upwards? Is the market moving downwards? Is the market forming a series of higher highs and higher lows, or is it forming a series of lower highs and lower lows? So these are the important things you need to identify when trading price action. I also made a little list of the main things, the main most important tools actually in the market that you use when trading price action. They say that the best tool to use in the market is actually price action instead of lagging indicators and tools like Fibonacci, etc. So when analyzing price action, you would mainly use candlestick analysis, market structure. You can definitely throw in some support and resistance lines and also trend lines. So in this little example here, I hope it's not too confusing, but I wanted to give you guys a real example of how you can spot the trend on the live market. So on the left-hand side here, we had this high price created a low, lower low, then formed a lower high, then formed a lower low. As you can see, the market was moving to the downside in this entire left side here, forming these lower lows and lower highs, again, forming proper bearish structure. All right, so we had price pushing all the way down. Let me get this tool here to help you guys see. Hopefully it doesn't get a little messy. Lower high, lower low, lower high, lower low, lower high. Price formed a lower low here, and it formed another lower high here. Now, what would you expect? You would expect price to form a new low, right? But as I said, the market moves, sorry, in trends at all times. If it is not moving in a downtrend, it will reverse to move in a uptrend, or it will move sideways. Now, these are one of the ways we identify reversal in the market. So we had a failure to trade below first, but instead of price now respecting this previous level of resistance and forming a price range, what did it do? It broke above this previous lower high or area of resistance and started trading above, forming a new high. So now we have the first indication of bullish momentum in the market. So now we can probably close our sell positions and expect or look to identify potential bullish opportunities in the market. So after we had this break above the bearish structure and the transition to bullish structure, we had a higher high to confirm that first, followed by a higher low, followed by a higher high. Retest of the previous low, followed by a new high and a new higher low. All right, so as you can see, guys, the market moves in trends. Identify the trends, identify the market structure, read the candlesticks, understand what they are telling you. All right, so that is pretty much it for price action 101.